We're going to walk through an Audible short that I called on Tuesday an MDB. This is a short we called on our private Twitter access feed on Tuesday, and also a long setup from Tuesday night's hit and run stock report in EOLS. First, let's take a look at the MDB short. Now, as you can see, MDB has been an elite high flyer whose rip to new highs came after a breakout in early February. This is the first hit and run strategy that I want to show you. This is what I call a rule of 4 breakout, because it's a breakout over a 3-point trend line. You can see here 1, 2, 3, and the ensuing breakout. Typically you don't find quadruple tops, so when a stock rises over a 3-point trend line, it's usually the real deal. So this breakout telegraphed a rip to new highs, particularly because MDB was showing superior relative strength over the fourth quarter. Notice that it never came down to its 200, never tested its 200-day moving average. That's this magenta line here, and in fact put in a double bottom in late December, early January that created the base for this rip to new highs. I've been a trader for over 35 years, and you don't see many quadruple tops. So I developed this strategy, the rule of 4 breakout, that identifies new legs up. Now on Monday, that's right here, MDB popped out. It gapped up and popped out of this what I call a rising wedge or an ending diagonal. It popped up and ran up, but tailed off to close near the open, and that leaves what I call a lizard sell signal. A lizard sell signal is simply a new 10-day high with an open and a close near session lows. So in other words, after the run-up, it came back to close near the open, leaving a topping tail. And this is a really good exhaustion signal, especially after a persistent run, strong run like MDB has seen. So I developed this lizard sell signal to identify exhaustion patterns. It does a good job of identifying these moves, particularly after strong run-ups. Now markets tend to play out in threes, so this lizard sell signal was important as it came from 3 drives to this high. 1, 2, 3, okay? And also it was in the context of what I mentioned earlier, this ending diagonal right here. You can see this diagonal. Stocks often have vicious declines after falling out of a ending diagonal or rising wedge, and so MDB was on our short radar for Tuesday after Monday's lizard sell signal. Let's see what happened on Tuesday. Let's go to a 10-minute. So here's Tuesday's action here, and you can see a breakaway gap to the downside, and MDB didn't do anything really for the first, just over a first hour. However, it triggered an opening range break, or an orb. This occurs on a break either up or down through the first half hour's range. So I bracket the first 30 minutes range, and a break to the top side is an up orb, and a break to the downside is a down orb. So you can see you had an authoritative orb triggered on this break of the morning range, and often that perpetuates a strong trend day or even a waterfall decline, which you saw in MDB. So the tip-off to this trade, which I called an audible, as I said on the private hit and run Twitter feed, was that while MDB was consolidating after this gap down, that the market bounced nicely, but MDB was heavy. It barely moved at all, as you can see. So when it triggered this orb, or basically right in here at around 105.50, I said it looked shortable and it was vulnerable. So the orb kicked off a waterfall decline, with MDB being magnetized right to a test of its 20-day moving average. Going back to the dailies, you'll see that after it broke, it triggered the orb, and after it broke this rising wedge or ending diagonal, it was in free fall mode, and it was magnetized right to its 20-day moving average, this red line here. So we want to go back to the 10-minute. So today MDB bounced. It bounced off its 20-day moving average, as we just showed, which was around, the low yesterday was around 96, and it bounced to around 101 today. More or less a 50%, close to a 50% retrace, and we called a short on the Twitter feed, and we got filled just over 101 today, and we covered half at 99.60. That's the as the hit and run methodology goes. We trim and trail. We take half off. When we have a nice profit, we lock it up, and then we put a trailing stop initially at break even, and if the stock moves lower, in this case it's a short, as it moves lower, we trail our stop down, trim and trail. So we covered half at 99.60 here today. See, it bounced to the 101 area, pulled back to around 99.60, and we covered, and then we lower our stop to break even at around 101. So that's MDB, and that's the short setup. As you can see, going back to the dailies real quick, the risk happens fast when you get when you put the pieces together and you get a series of signal bars combined with pattern. That's this lizard cell signal combined with the rising wedge pattern. When there are a lot of profits to be taken, players that have been running, riding the trend and running with this this position, their positions all the way up, aren't shy about taking profits. And on the first day down, typically those that are not long, that are maybe looking to deploy money in the stock, they're not eager to buy on the first day down, at least not until it's touched support. And you had initial support here, so they keep their hands in their pockets, and the shorts can have a field day as the stops are triggered, and MDB may even have a little more work to do to get back to these prior highs here, closer to the 95 strike. Let's take a look at the long setup we had in last night's report that triggered today. EOLS, it was a nice percentage gain. And we'll show you why. EOLS left multiple buy setups on Tuesday. It was a holy grail. A holy grail is a pullback. A holy grail long signal is a pullback to a rising 20-day moving average, and this red line here is the 20-day moving average. So you can see it pulled back to the 20-day here, turned up, but didn't follow through, came down and kissed the 20 again, and that pattern, that up down up sequence, led me to use it last night, because you also had a 180 buy signal. In other words, it's above its 50 and 20-day moving averages, closed at near session lows on Monday, but yesterday closed at near session highs. So that's a holy grail 180 buy setup, and I have had a lot of success using the conceptually correct pattern that the first mouse, the first buy signal, often gets the squeeze, while the second mouse, the second buy signal, typically gets the cheese. So you can see here today you had a nice move, and the setup worked, and the second mouse got the cheese. So you also had an NR 7-day in combo with the Holy Grail and the 180. And NR 7-day is simply the narrowest range in 7 days, and yesterday's bar was the narrowest range in 7 days. And usually these contractions in volatility and range lead to an expansion of volatility and range within the next few sessions. Stocks typically breathe. That's the natural behavior of price action. They inhale and they exhale, they contract and they expand. So these contraction ranges usually lead to an expansion range within a few days, and that's exactly what played out here. So when you see the multiple signals like this coming together, it enhances the odds of a successful speculation and a follow-through. So let's map or track the action today in EOLS and see how we traded it, how we played it. So you can see it actually pulled the rubber band back a little bit after the open in sympathy with a red tape. But then what happens? You have an explosive orb, an explosion to the top side after EOLS triggers an opening range break. This is the opening range here, the first 30 minutes. These are 10-minute bars, the first 30 minutes range, and this is a good sign. It typically, when you see an explosive orb like that, explosive opening range breakout, usually means you're going to get follow through, and it did. First pullback met with buying and an extension. So at the same time, putting the pieces together again, which is always important, stacks the odds in your favor, you can see that this opening range breakout coincided with a rule of 4 buy signal, a little rule of 4 on the 10-minute. Okay, you can visualize this trend line here coming across the top. Let's pull the, so you can see this breakout here, a rule of 4 breakout on the 10-minute, a breakout over 3-point declining trend line. Let's check the hourlies, because we're talking about putting the pieces together to stack the odds in your favor. Here you see the same thing on the hourlies, a rule of 4 breakout, above a 3-point trend line right here. Now let's look at the dailies and see what there is to see. So we see a 6-month cup and handle right here, and this is your 20-day moving average in here. So this whole triangle pattern here, let's zoom in a little. This whole triangle pattern that we had here is part of a handle of a 6-month cup and handle. So you put all these pieces together on multiple time frames. You always want to look at things setting up for a volatility explosion when the various time frames come together. The 10-minute, which is what I use for the short term, the hourlies, the dailies, and then even go to the weeklies. Let's see what there is to see if we pull back to the weeklies. Here you just see another breakout here on this gap. So EOLS was in a strong position. It was in a strong uptrend from this momentum gap here, turns the weekly down for the first time, and is in a position to take out these highs here. So we sold half of the position. We were triggered long on an opening range breakout at 25.50. Go back to the 10-minute, see how we played this today. We were triggered long at 25.50. That's right here where this opening range breakout occurred. We sold half at around 27.20 into the bell just to protect, and we raise our stop to 25.50, and now we'll let it run and see what the market wants to give us. So whether we like it or not, we're all in the pattern recognition business. My strategies, these hit and run strategies, key off price patterns. If you like this approach to the market, please like this video and be sure to click the link for a free copy of my classic bestseller, Hit and Run Trading, and a trial to my Hit and Run Trading Report. Now, you don't have to be great to get started, but you have to get started to be great. And if you can recognize patterns and you can draw straight lines and remember these very simple reversal, trend, continuation strategies, you can make a living trading stocks. That's it for now. See you next time. Thanks for listening.